Welcome to the Real P&L Trading Show, where I share my account. Actually, I share 4 of my accounts, and I share my proprietary safe wheel strategy for free. Let me know that you guys can hear me okay. My audio is working, my video is working okay. Looks like it probably is. But also be sure to post any questions you might have about anything about options trading, about any of the systems, anything like that. I want to get those questions in before I end the broadcast. And Will says the audio is good. Thank you, Will. Appreciate that. All right, let's jump right into it. You can see my screen here. And this is the earnings edge. Earnings edge has done quite well in 2025. In fact, I'm up over 105%, which is, really good returns, really good returns. I'm actually going to be doing a live presentation on Saturday about the earnings edge and talk about, the 3 edges that I use in the earnings edge in order to, right now I'm up over 105% just in 2025. I have my new 3.0 version that I just started applying in 2025. Obviously, it's working quite well so far. Okay, let's see what, here's my earnings edge account here. I did not make any trades last week with this high volatility. So I didn't make any trades last week on it. So the account value is 12,467. That's my net lick. You can see my net lick, 12,467. So 12,467. And what is SPY trading right now? 540.82. 540.82. So you can see that, let's see, well, it shows that I'm up 94.8% on the earnings edge so far this year. So yeah, close to 100% on the earnings edge. And you can see how it's done over 2022, where it outperformed by about 80%. And then 2023, it underperformed, 2024 underperformed, and now 2025 with the newer version just really doing well. You can see since the beginning, the earnings edge is up 149%, where the S&P 500 since the beginning of 2022 is using SPY as the proxy is up 13.87%. So the market's up 14% in 3 years and a quarter. Only up 14%. So it's been a pretty slow time frame for the market since 2022. All right, let's talk about the PL5 Pro. Let me get into that account. PL5 Pro is going a little slow this week. Let me find the right account here. And trades, I'm at a little lower than it was earlier. Yeah, there, that's what I thought it would be. 420, let's call it 427. 427. So it's down a little bit from last week. Waiting for the market to kind of recover a little bit, and we'll see how things go. You can see that this year, the PL5 Pro is down 8.86%. And the market's down 7.63%, so fairly close, just barely underperforming there. But of course, drawdowns are lower. You can see I started this on July 19, 2024. I did 16% through the end of 2024. The market was up 6.65. So if you look at the PL5 Pro, since I made that tweak, made that change, started trading it live, I'm up 5.72%. The market's down 1.5% in that same time frame. So it's still outperforming there. I expect the PL5 Pro to recover. I really think the PL5 Pro is going to have a really good year this year. By the end of the year, it's going to be doing quite well. But right now, we're still in the middle of this crash market. We haven't come out of it yet. So we're waiting for this particular crash period to end to see kind of where we end up there. Okay, so that's the PL5 Pro. Let's talk about the Premier Level 5. This is very tightly tied to the market, so it will go up and down with the market. And I have this in my interactive brokers account because I have less money involved. and I like to keep my positions low. So I'm at 29,321 down there, 29,321. And 321. Okay, so you can see this year so far down 11%, the market's down 7.63, so underperforming here. But you can see what happened when I started employing this system July 16, 2024. I was up 10.3% at the end of the year. The market was up about 3.9%. So you can see that the PL5, since the inception, is down 2.26. The market's down about 4%. So still outperforming by a little bit, as expected. And I think as the market, as we get through this period of this crash period, this system's going to recover very quickly. Same for the PL5 Pro. Okay, so that's the earnings edge, the PL5 Pro and the PL5. Let's get to the safe wheel. What's going on with the safe wheel? You can see the safe wheel is doing quite well in this environment. Let's bring this over and get into the safe wheel. That would be this account here, I believe. So 5913 is the balance, 5913. So the safe wheel is up almost 8% year to date, and the market again is down minus 7.6%. And you can see how in 2022 the safe wheel outperformed by about 40%, then underperformed by 20% in 2023, and then 2024 underperformed by 38%, something like that, and now outperforming in 2025. But overall, since the beginning of 2022, the safe wheel's up 18.2% and the market's up 13.87. So you can see that the safe wheel is actually outperforming as time goes by at this time, right, since 2022. So it is actually outperforming, which is pretty cool, pretty interesting, because the drawdowns are only about half of what the S&P is. So on a risk-adjusted basis, it's outperforming quite well. Okay, so that is the safe wheel. Let's talk about the account, and let's make some. I'm going to make some trades. I'm going to manage the position. So in the safe wheel position, we have the put hedge, right? And we've got the long call here. The long calls are what I trade on Fridays. I spend about $5 or $6 on long calls every Friday, and that you don't see, but you've seen every other trade here live in this account. Now, the first thing I want to do is make sure my hedges are okay. So my long call hedge is fine. And now I want to check my put hedge, where I've got 3 of those. I want to make sure that my days in trade are not less than 100. That's good. I want to make sure my hedge hasn't paid off. Well, it can't pay off unless I'm long 200 shares. So that's, that's a no. And then is my strike price within 70% of the price of the actual underlying, and I know that it is. 22 is within 70% of 23.90. So I know my hedge is good. So now I'm going to run the traditional wheel. Now I've got it signed 100 shares at the 26 strike. So I'm going to see if I can sell a covered call at 26 in the near term. Now, the way I determine whether I can or cannot is whether I can collect around 26 bucks or more. Let's take a look. So I'm going to go into the nearest expiration cycle that expires this Friday. I'm going to look at the calls and go to the 26 strike. And I can only get about 12 to 16 cents. So I can't get enough premium to sell a covered call. So I'm going to go ahead and add another put. I'm going to go ahead and increase my position. And I did this last week. I sold a put and did not get assigned, so I was able to keep that premium. Okay, so which strike am I going to use? Well, I'm going to determine that by the premium. This is 14 to 51, so this would be enough premium here if I wanted to go to the 22.50 strike. So I like to go where I can get enough premium. I don't know if this one would be enough, 22. Let's see, put that in there and see what the mid price. Oh, the mid's 34 there. Okay. So I can actually go to the 22.50 and collect enough premium. So I'm going to sell one of these. That mid price is 32. So let's go ahead and go there. Let's see if I can get filled. I'm trying to collect as much premium as possible. 30 cents here. Okay, let's see if I can get that. I'm going to do one of these based on the sizing because I have between $5,000 and $10,000. Oh, that filled right away. And I got 30 cents or $30. So I collected $30 and I might get assigned, right? And where am I with this? I might get assigned at 22.50, but that's okay because my put is at 22. So this put will definitely protect what I have here. So I sold the 22.50 put, and now I'm just going to wait till next week. I'm going to keep that $30. I'm always ABC, always be collecting. I'm always collecting premium, and that's what the system is. It's pretty simple. I don't even really look at the account until Friday, and then I'll come in on Monday and really evaluate it. So I really only get serious about this account once a week. I like that. Makes life easy. Okay, let's see if there's any questions or comments. Will says the audio is good. And no first yet. I guess you're talking about the shovel. Will says, do you think there's a way to make the earnings edge a little safer, less volatile for bigger accounts, and lowering the expected gain for the year to 25%? Oh yeah, absolutely. So you just simply allocate less capital to the trade. So if you have more capital, you could only allocate, say, 20% of your buying power to the trade, or 10% of the buying power to your trade. And you can get the same kind of results with a lot less volatility. But of course, the results would be a lower return, but you could lower the volatility also. That's actually would be a really good idea when you have more capital. Less is more. Is the wheel, are you doing anything different since options are expiring on Thursday instead of Friday? Oh, I didn't even realize that. And the answer is no. Oh, is it Good Friday coming up? Okay. Yeah. So I just, I didn't notice this is 3 and typically it's 4 days. So it looks like, so the only thing I'm going to do different is on Thursday, I'm going to go in and buy my long call instead of doing it on Friday. But other than that, really no difference. We might be collecting a little less premium than normal because there's less days in the week, but no, nothing different really, except for when I buy that long call. Well, thanks for letting me know that. I wasn't even thinking about it. Well, I know the SPY doesn't fit the safe wheel filter. And the reason why it doesn't is because it doesn't have enough premium. So if I go in there and I try to sell something out of the money, I'm not going to be able to get 1% or higher. So that's the reason why SPY. So, I mean, if you want to take less premium, you could use it. He said, but can you think of an alteration that would fit it? And would that version of the safe wheel outperform the market? It's hard to say of an alteration. I would say I would just stick to somewhere where I can get the higher premium. And will it outperform the market? Sometimes it does, sometimes it doesn't. You saw what it did in 2023 and 2024, where it did not outperform the market in I would call extreme bull market, right? Because both the time, I think each year the market went up close to 25%. So that's really hard to match. So I would say that it's probably not going to outperform in extreme bull markets. But when the market's rocky, going sideways, going down, stuff like where we're at right now, it outperforms. So that's kind of the way I look at it. But if you wanted to use SPY, you could. You're just not going to collect as much premium, so you're going to get a lot less volatility, and you're definitely not going to outperform in a bull market when you're not collecting that much premium, for sure. So it's just a kind of a safety. It could be a way that you want to diversify a little bit, right? You could have a little part of your money diversified into the safe wheel, and you know it's going to be more conservative, and in a down market, in a crash market, in a sideways market, you're going to do quite well. But then when the market is a bull market, you're not going to perform as well as the market. But maybe that's what you want. You can diversify that way. And using SPY, you would get a lot less premium, but it would still probably work okay. Not as good, I don't think, because you're not getting as much premium. Will says people are enjoying spring break. You still need to like and sub. I appreciate that. Yes. Hit that like button. I'd appreciate if you did that, because I am interested in sharing my net liquidation or even my equity curve, which I show every month. And I think that's where the rubber meets the road. And I see these guys out there talk about how you can make a living doing this and make a living doing this trade. Well, they don't share their, how do you know anyone's making a living doing that if you don't know their actual performance? So I don't, those claims are just outrageously high to say that somebody can make a living trading options, but they don't share their net liquidation or their equity curve. So they're basically making a claim without backing it up. That's why if you hit the like button, it would help my channel grow, so I can, hopefully influence other people to not listen to that stuff, right? So that would help me. Hitting the like button would help. Less is more. I wonder what's happening with other YouTubers' accounts that trade the wheel in this environment. I suspect they're stuck in the mud. Yes, they are. I was doing some calculations on some other people, and they're down probably close to 50%, like half their account. They might be getting margin called. I mean, who knows? And they're running the wheel strategy. So these guys talking about the wheel, you notice that they're not talking about their current performance. They're talking about these great opportunities that are out there right now, which is true. There are great opportunities out there right now for level 4 traders, for wheel traders. If you were just to start today, oh yeah, that'd be great. But what about your existing positions, right? Probably down 50%. Will, the safe earnings edge. Well, yeah, you can make it safe if you just really don't allocate, just take a little bit, 10% of your capital and allocate it towards it. You can make it pretty safe. Take care, Will. I guess you gotta head out. And Shovel, after all these messages, says that he's first. Hey, Shovel, how's it going? Okay. Well, again, hit that like button. I appreciate it. Let's get this information out there. Let's get this stuff spread. Let's talk about the fact that people need to share their net liquidation. Otherwise, what are they teaching? Do you really believe that someone that teaches you should make money? Or do you think it's okay if they don't make money trading and they teach you? If you're okay with them not making money and they teach you, then don't worry about their net liquidation. Don't worry about their equity curve. No big deal. But if you believe that instructors should actually make money in order to teach people, or actually show what's happening in their account so you can see what you're actually getting into, that's what I'm interested in doing. And if you hit the like button, that helps that cause. So I'd appreciate that. All right, guys. So I appreciate you guys. And here's one thing I like to say. If the P&L is not real, what else are they trying to conceal? I'll be back next week. See you then.